All right, greetings traders. Sam here from TradeDevils.com and TradeDevils-Indicators.com. Today we're looking at our Cumulative Delta Volume Indicator. And I've got right in front of us here, this is a 1597 tick chart of the September NQ. And as I always do, I just use the most recent week of data. Now you can see I'm recording this down here on this Sunday, the 22nd of August. And a couple of things to note here on the chart. Now I have our initial balance indicator, which I do on every video just to frame the day. So we're not just floating out in space on a gray chart without any context. So we can see the RTH open to close. And it's not uncommon on a Friday. We're self-contained within the initial balance. Additionally, on the chart here, I have our custom toolbar I use this on every chart. But I'm going to grab some of these tools here as we work through the video. And then down below, I have our Cumulative Delta Volume Indicator in its default setting. Now, before we get into this, I should note that if you are the owner of the order flow version of Ninjatrader, then you already have this indicator. That's part of that package. The reason we created this is the majority of people do not own the order flow version of Ninja. It requires a larger investment. So for all those people that want access to this information, because I think you'll find is if you've not worked with it before, it can be very, very useful to you. So we created this for all those people that don't own that version of it. Additionally, I'm just going to show you this very quickly. The Ninja version gives you two ways to look at it. Right? So you get the candlestick version like this, or you get the individual bar delta, and it's represented like this. All right, so you can see here, this is the order flow cumulative delta. These are the two ways you can look at it with the native cum delta indicator that comes with the order flow package. Well, this I find less useful to me. So if I had to pick between the two, I would stick with the candles. But we're going to show you a different way that you can view the cumulative data that I think you'll find more useful, particularly if you're a swing trader. Now, before we get into too much of the detail and the nuance and how to apply this, let's be clear about exactly what we're talking about here. So if you're familiar with Delta, bear with me here. I won't take long on this. But for those that might this is new to them, or they're just trying to figure out how to use it in their trading, let's be precise about what we're talking about. So Delta it's very simple. It's simply the market order buys less market order sells. Now the emphasis there is on market orders. So the way that that's often interpreted, so if you were to Google around on Cumulative Delta, how to read it, how to trade with it, you'll often find that the language used for the delta is the aggressors versus the passive indicators, and that distinction being the aggressor is entering and exiting the market via market orders, whereas the passive investor, and passive, I don't particularly like that word, but that's how it's termed. The passive investor being the investor who's entering or exiting with limit orders. Now, it's not unreasonable to deduce from that the market orders are going to tend to be the retail trader, whereas the limit order is more likely to be the professional trader or the smart money or the hedge fund or the bank or the whale, however you want to determine it. It's more typical that retail, if you will, right? I realize I am generalizing, but retail is going to enter and exit with market orders, whereas the professional is going to enter and exit with limit orders, and often that's a result of the fact that they're entering and exiting at size. So the slippage would be significant for them, and they don't want that kind of slippage. So they'll enter and exit with limit orders because they're patient, or they're not being forced to, or they have deeper pockets, right? There's all sorts of reasons for that. But at its root, we can look at this and say, well, when the aggressors are in control, we can see that reflected in the cumulative delta. So if we look at here the cumulative delta here in the candlestick format like this, you can see it tracks the market fairly well. So here, if I squunch this a little bit here, we can see the pre-market here. So we can see for the most part, pre-market, right, we're just going straight up. Right, and while it's scrunched a little bit here, you get the basic gist of it here. So the market is pushing higher. Now you will note here that as we get to this level here, so here, let me put this. So we get to this level right here, we get a disconnect. So the cumulative delta is falling, yet the prices are rising. So what would explain that? Well, that is why I made the point of making that distinction between the professional and the retail trader. So if the market is still rallying and cumulative delta is falling, we know that it's limit orders that are driving the market higher. So it's more pronounced when you see the divergence that you get here. So as a result of this, we can see that professionals are driving, well, let me rephrase. Limit orders are driving the market higher, and we have the delta falling. So this could be the result of traders being forced to get out of the market, or they're trying to jump in ahead of a market turn. But if we're going to stay with the language that's so consistently used in terms of analyzing delta, we can see here that limit orders are driving it up and market orders are on the wrong side of the market, at least in this. So if you were shorting here, so for example, here's a good one. So if you took that little short there, you had 3 candles in a row heading down right here. Well, if the market starts running higher, you don't see that reflected here in the market orders. So eventually, if you took that short because you thought the market was coming down here, you're going to be forced to cover. Limit orders keep driving it higher and higher and higher until eventually, right, the divergence ultimately shows itself here. Right, and you can see that eventually the market, if I bring this up a little bit, the market rolls over, and we can see here now we've got the price action matching the cumulative delta, or the aggressors in the market. So as a result of the fact that this can be a running total, right? So we can look at delta now in a couple of different ways. And this is just the advantage of contemporary trading. This is so very different than when I started some 30 years ago. Now we can see the delta at each price level via a footprint chart. We can see the level per candle, which you can see here, or you can see, as I showed you before, you can see the per candle here. Or in cumulative delta here, we can just track it over a period of time. Now it's most commonly tracked from session to session, but you could specify, of course, right? You could say I just want RTH, and you could just start the cumulative delta tally from the open of the RTH. But this is more commonly how you'll see it, where it's run off of the 24-hour session. Let me clear this up here. So we can see that there's value here, because what we're looking for is when price and the cumulative delta are moving in the same direction. That's where we can get some insight and perhaps use it to our advantage in the market. So as we look here, if you're, to some degree, it really depends on what you're trying to accomplish in the market. Now, if you're a scalper, let's focus on the scalper first. I'm going to reset this a little bit because it's got to accommodate all of this. If you were on the hard right edge, you wouldn't see that yet. But I want you to focus here. If you're a scalper, now this is early in the day. Now this is 9:43, so first 15 minutes, market's done nothing. But all of a sudden, we get this little pop, right? So we get this little kick. Well, you can see that is reflected down here, right? So for whatever reason here, we have aggressors, right? That's all we can reflect down here is market orders here, and the price action, we're moving in the same direction. So the way I like to think of it is I want to look for those areas where everything's in sync. So the market orders are in sync with the limit orders here, and I don't have limit orders holding the price down. You can think of it that way. When they're all in sync, the market will track in whatever direction that it's going to go. All right, based on those aggressors. Now, you can see here we're tracking. It's pretty close, right? So as this little sell-off here, we get this little sell-off. Then we get this little pump here, right? Now, if you're a scalper, these little pumps, right? That's more money than you realize here. So just assume you took the break of that high and you went. Oh, there's 72 ticks, right? So that little pop there, well, to your eye, it doesn't look like it's that much. That's more than you realize. The first one here, if you took let's say you took the break of that high and you went to your first candle, well, there's 122 ticks. So these little pumps, if you're a scalper and you're in there and you've got a 10 tick, 20 tick, 30 tick, and you're a 3-lot trader, well, right, that's a big hit right there. And you can see it again and again. And what we're looking for when we're using this indicator in this format is we're looking for those periods of time where we are in sync. Here's another good example here. So we get this, right? We can see the just via the bars, right? We got 1, 2, 3, 4, 5 down bars here, and you can see that matched down here, right? But how quickly, look how quickly this starts to turn. Now, what's interesting is that this can often be a bit of a leading indicator. You can kind of see in advance, because if I put the crosshairs on this, the delta starts to turn right here. You can see the cumulative delta is starting to climb in value here, but it's doing it a little bit ahead of the price action. So by the time we get here, where we get this little shot here of aggression, let me get that off. I got this shot here of aggression. Oh, come here. That's what I'm trying to get right there. All right, so that is reflected down here, right? So if we look, it's right here. I guess we can bring it back a little bit and match that up. So let me get the crosshairs here. So we get right here. This is where we start to see aggressive buying coming into the market. Now again, that's more than you realize. So let's say you take the break of that candle, went to the pivot high. There's 84 ticks right there. So again, if you're trading 2, 3, or 20, 30 lots, this is what you're looking for. And so we want to see that confluence here, and you get it again, right? Immediately following, look at the burst of delta here, and it's reflected in the price, right? So if you're trading this, that can be incredibly advantageous to you. And if you, let's say you're on the wrong side, right? You thought, oh, this is market's trending. Oh, sorry, I know I talk with my hands. So you might think, oh, I've got swing, retracement, swing. And you're thinking, oh, we're going down to test the IB low, right? So it's been very easy. It's probably a 50 as well. Looks like it might be. Right, so you're right there at the 50, and you're thinking, oh, great, I got a measured move. We're going down to this target. That would be very easy to think that. If you weren't looking down here at this cumulative data, well, as soon as you start to see that, well, it's pretty evident here that there's a reasonable chance here you're on the wrong side of the market. So are you going to stay short there? Well, certainly by the time it takes out that pivot, you know you're wrong. But that, again, the impact there is not insignificant, right? So there's just to that pivot, there's, again, that's almost $500, right? So if you're a scalper and you're in a 3 lot, are you going to stay short through that? That's why this could be really valuable too. We can see the trend is moving higher. Now, aggressors are in control here, and we can see while it didn't get the absolute turn here, it was a bit of a leading indicator here. So the aggressors are pushing higher. Now, you'll note here what happens, and while this is not the ideal way to look at this, we can see here that at the end of the day here, and I say that only because it's the end of the week on Friday, the delta is now flat or falling lower, yet prices are still grinding higher. Now, what would explain that? It's limit orders, right? So even though you see and here again, we're at the very end of the day, so you can't interpret too much, but I just want to make the point. You can see the difference. The only way this continues to go higher with market orders on the other side of it is via limit orders, right? So that's pushing it up. So you can almost deduce from that, if you could make the assumption that limit orders are the smart money and market orders are the dumb money is the wrong way to say that, but you might think of it as pros, amateurs, smart money, dumb money. I don't want to use the name dumb, but I'm in my mind, that's how I'm thinking, right? Smart money, dumb money. That's what I'm thinking, right? And we always want to track what the smart money is doing, but as we can see here, that there are periods of time where smart money and dumb money are in sync, right? They're going the same direction. That is what we're looking for. Not when they're going the wrong direction here. I can extrapolate from what's happening here why this is going higher. But where I want to make money is when they're going the same direction. Smart money, dumb money, if you'll allow me to use that terminology. Going the same direction. Professionals, retail. How about I say it that way? Okay, let me pull that off here. Now, this is the default view with which we ship you our cumulative delta indicator, but we're giving you 3 different ways to look at it. Now, one of the reasons I like this just as the default is because throughout the course of the day, I'm drawing trend lines all over my cumulative delta. I want to see the breaks here. Now, here's a good example. Downtrend, right? You can track it just like you would a normal chart. And you might even do the same thing here and say, well, okay, if I'm going to put a trend line below, well, let's put a trend line above, right? And if I see something happening here, if I did that a little more sharply, did it like this, Well, hey, that's not insignificant. Now you can say, hey, you're on the right edge of the market. Do you know? Well, okay, there you're on the hard right edge. That's the kind of thing I'm looking for, right? And particularly if I'm scalping for 10, 20, 30 ticks, that's just the burst that I want to see, and I want to see the price action matching that, rather than this where I've got a mismatch. I understand what's happening here, but this is not where I want to be trading. I want to be trading when they're going the same direction. Now, so let me show you a couple of different ways you can look at this. This is, again, this being the default, and as I was kind of showing you here, I would do this. I'd have lines all over this, right? So this is our little line tool. I like this. I would have the down sloping trend line. I mean, my charts at the end of the day, you know, there's stuff all over this. The same thing here. I might do the same thing and say, okay, well, looks like this is a level here that's being tested here. Now, if this were the middle of the day, that might have more significance rather than end of the week on a Friday. But I like that I can get in here and do all of this with my cumulative delta. So again, at the end of the day, my charts are full of all sorts of lines that I've drawn all over it. Now we're going to give you a couple of different ways to look at this, but this is the standard, and this would match what you'd get from Ninja. This, while okay, there's some value here. What I don't like, look at the comparison between the two. What I don't like about this, and why I think this is less useful, and I think you'll prefer the version that I'm going to show you, is that I can see here we're rallying here. So I got a little pullback here, which is reflected here. But what I see, and this can throw me off, I see divergence here. I see, while I'm tracking higher, remember this is the running tally, this is the bar by bar. So I can see that I'm pushing higher here, yet I see this divergence. This, even here, right? Even here, this might have me reluctant. Oh, hang on. Reluctant to get into that little push right there, and that little push was significant in the market, right? This little push here is, I want to be there for that. So there's the opening range high. I might have waited for that. So there's 99 ticks right here. You'd probably not see. Look at the structure here. You'd probably wait for that to clear, which is why I drew it from a few ticks beyond. There's still 94 ticks there. That might have me hesitating to enter the market there. Whereas here, I can see it so clearly. So I make that distinction, and that's why I don't prefer this. So let me bring that down, but I just want you to realize that that is available to you in the order flow version. Now, again, we're going to show it to you in a couple of different ways. So this is the next way that we can show this to you, where you have the exact same thing, except we've put a Bollinger Band on it. So I have a 20-period moving average of the cumulative delta, and then 1 and 2 standard deviations on either side. Well, this can be helpful in spotting divergences. So it's not quite the same as in if I'm far outside of the Bollinger Bands here, that's necessarily a buy signal, but it's an indication. I mean, I'm 2 standard deviations from the running average of it, from the moving average. So it may be an area where I might want to start looking for things to move the other direction. And you'll also find that the center line, let's get another day of data. The center line can actually often be significant. And that center line is just our moving average. So you can see here, as we've had this big pump up, and now all of a sudden as we go down, right, it's almost exactly like the prior day. Pump in the morning, retrace in the middle of the day, pump at the end and at the later part of the afternoon. Well, here, so I've got a series of swing, lower high, swing, lower high, swing, lower high. Well, you can see that's reflected here in the delta. So throughout all of this, we are in sync. We're going the same direction. I can see that down here. Each one of these little retraces, look, can't clear the center line, or the moving average, can't clear it, right? So this is, if I'm wondering here, do I want this? Do I want that short? Market's been up all day. Do I want that? Well, looking down here, I can see, well, hey, that's a pretty good move right there. And then again, right, it's deceptive. Let's say here, let me grab my little line tool. Let's say you took the break of that. Let's bring that down. You took the break of that low, right? So you're waiting and say, okay, well, I want a lower low here, right? I got a lower high, lower high. I want to see a lower low. So I'm gonna wait for that break, and I'm gonna where do I want that? Let's say you got a little slippage. Come here, little slippage on that to the low. Well, there's 108 ticks. So it's annoying. Ninja does that. Okay, so here I'm not even going all the way. I'm going to right here, right about here, right where I'm pushing the lower boundary of the standard deviation. Well, there's $540, right? So if you're in a 2, 3, 4, or 10, 20, 30 lot, that's significant, right? I mean, you could be done for the day right there. Now, look what happens here. Let me take this off. So then we get a thrust down here. Now I get outside of 2 standard deviations. Look how quickly that snaps back. Not coincidence. So there's something to it. Right? This little snapback here is reflected down below. So again, as a scalper, that's valuable information to me. Sideways as we hover around the moving average, and then we go again. I say, I mean, it should be fairly evident here how this can add value. Right? So I would not be day trading without it. Right? I want to see this now. The more you use it, the more you get a feel for it. Again, as a scalper, those kind of little pumps are incredibly important in terms of timing entry and exit, and how much legs are, how much of a push is really there. If I see it waffling, or if I were, for example, let me just give you what I think looks like an easy example. Okay, so we're coming down to the golden zone here, and I think, okay, this is just a ABC correction, and now we're going up to new highs. So I might have been thinking that right here, and you can see that reflected below. Oh, hey, we got a little pop. What happens at the midline? Right, the moving average can't even cross the center line, so we roll over. So at that point in time, now look at the cum delta, right? That's per bar delta, so I can see we're falling. Now, do I want to be long here? Right. Well, remember, we want to be in line. We're looking for those places where everything is going the same directions. Smart money, dumb money, retail, professional, however you want to think of it. That's what we're looking for, is those moments where we're in sync. All right. So the Bollinger Bands can be a nice way. Let me see. If I can find this example of some good divergence at the top here. Let's see if I get. Oh, that's not bad, actually, right there. So let me just grab the crosshairs. Okay, so here we can see a fairly good example. So here's the kick, right? So you can see aggressors, market orders, limit orders are in sync. Everybody's in sync right here. Let me take that off. Right, so everybody's in sync for this little kick right here. Where'd you go? Probably gonna have to edit that out. Okay, here it is. That's what I was looking for. Come back down here. Okay, so here's what I was trying to get to. This little pump here is right in line with this pump here. Okay, now that's again, it's deceptive, right? There's 180 ticks, right? I want to know about that, right? So if I see that coming, look what happens here. Let me get that out of the way. Right, we're trying to break the center line. Can't break it. Can't break it. Boom, through. Right. Look. Now you can. This is where the Bollinger Bands can be helpful here. So I get look at the divergence up here. I get a new high. Well, let's use this. I get this move. Bear with me. I get this move here, but down below I've got this move here. It's not so much that I want to enter immediately upon seeing that, because remember, if the assumption is that the market orders are the retail trade, I don't want to say dumb money. If the market orders are the dumb money and smart money is driving this higher, remember, price is truth. Right, so this is a derivative of price. So if the market's going higher and this is going lower, well, we defer to price. Now, but that said, this tells me that we're out of sync. That's real. It's not that, oh, hey, I'm shorting that, and that would have been a winning trade. But I want to be aware of when we're out of sync. So I've got divergence here. Now that turns out to be a nice little trade, right? I mean, there's $700 right there. But I'd be cautious about reacting to that always, because the implication here is that the market orders are going to lead the limit orders, and that's usually not the case. If you just want to talk about aggressor versus passive, well, you can certainly make the claim that once we get here, the aggressors are in control of the market. They're controlling that. Now, I get a retrace. Again, this is the kind of thing that I look for. So if I'm going to go back up, and I'm thinking, oh, hey, we're going off to break those highs. We're going to get a new high. Well, I want to see that reflected down below. I can't even cross the center line. Right, so now we start to go and we're in sync, right? Lower high, lower high, lower low, lower high, lower low. And the cum delta is going right with it. And the Bollinger Bands can give you a nice insight into, okay, where can I spot that divergence? What's happening relative to price to cum delta? Can be very useful. I still pull this off here. I still am drawing lines like crazy. Right? I've got that line going here. I look for levels. I do the same kind of thing here and say, okay, well that was obviously important to the market. Boom, boom, boom. Now, prior support becomes the resistance as we go down. So you can still do this here, but those Bollinger Bands can let you spot those divergences, I think, a little bit more easily. So so these. And looking at it in this format, I think is much more useful to the scalper looking for short little punches, rather than the swing trader who's looking for that move, and then they're looking for this move, right? They're looking for those longer sustained moves here, which, yeah, I know this is kind of fun to do. Oh, lower high, I want to sell it, right? What's there? There's $2,600. Now, are you going to sit through all of that and all of these little turns? Well, depends how skilled you are as a trader, what kind of size you're trading, and what your objectives are in the market. Of course, it's always easy in hindsight. When you're right there, doesn't that look like that's going to keep going? Well, look at the delta. Right? It's easy to say in hindsight, oh, well, I'm selling it now. Well, now look over here, right? We've just broken that trend line, or that support line that I drew. Right? Do I want to be short there? Look, now, so you got one green bar. Are you panicking here? Well, I'd think probably not, but you would certainly want to be aware of the fact that you're coming into that prior structure. Now, look down here. Oh, now am I scared? Right? See, that's just the kind of thing that might scare you out of the market if you're a scalper. Right? Oh, hey, there was nothing wrong with this trade. Right? So let's say you took that little break and you had that. Okay, well, there's 82 ticks. Right? Nothing wrong with it. But right here, it looks like, oh, maybe I'm wrong about this trade, or if hopefully, right, you use some sort of entry here. Maybe you're using a stop to put you in via market order, which would be reflected in that down here. But you see now, oh, you see right here. Are you worried? Well, at this point, you likely got stopped out, but you got. Again, depending on what your ATM is set, there's 87 ticks there. So if you're after 10, 20, 30, boom, 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 all three got filled before that little thing came to worry you. Now let's say you're taking the break of this low, right? So look at the delta. Now we're outside of 2 standard deviations. Oh, now I'm in the market. Again, it's a question of your risk tolerance and what's appropriate for your account size. But ideally, you'd have the stop above the most recent pivot. So let's just do that. Oh, where's my line tool? Let's put our stop right here. Now that's a pretty good size stop. So what were you risking there? So if you're let's say you got a little slippage, all right, that's pretty good. That's 138 ticks. Now that might be too much for the average person. So maybe you're going to cut that in half and use the most recent swing pivot here. You can see this was important to the market. So as it broke that, and we came down here. Again, that's not an insignificant amount of risk. So if that's too big for you, then you'd want to trade with the micros. But as we come down here, I mean, so this, let's do it this way. If this is your entry, I got it, pardon me, here. This is your stop, this is your entry, right? So there's 50, 1, 1.5, 2, boom, 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 all got it, right? So your risk to reward ratio here was excellent. Right, and all it took was that little squirt down here to get into that, right? When they're in alignment, right? That's how you want to approach that. Okay, so with that said, so we've got just the candles, right? Which you want to do it. You want to look at it here with Bollinger Bands, you like that. And the third way that we give it to you is via histogram, which looks like this. Now, this is actually, if I'm swing trading, this is, well, my template would have more on it, but this is how I like to look at it. So what can I see here? Well, what I've got below here, I've made the Bollinger Bands, the outer bands, transparent, and I'm just working with the center line here, which is a 20-period moving average of the cumulative delta. And what's significant to me, aside from just what I can see, the sentiment of the market, I also want to pay attention to where I have gaps between the two. And let me show you how you might interpret that. So here, we're just back again, we're working off of Friday. we'll look at some other days as well. But okay, so you're likely not trading in the first couple of minutes of the market open, although maybe you are. But certainly we can see coming into the market where the bias is, where the sentiment is, where the aggressors are, right? However you want to determine that, whatever language you want to use here. Where are the aggressive traders? What's the sentiment? Okay, so here's the pre-market low. That's, from the pre-market low to the IB high, that's almost 1,000 ticks. Right, and it's right here. You'll note now we start to fall. So through this entire rip, look at the Cum Delta. Right, so we know what the sentiment is, and we know that all the way up we've got smart money and dumb money, professional and retail in sync with one another. Once we turn, here's where we cross the zero line right there on that bar. After we establish the IB high, right? There's that trade here I talk about. It's the easiest money on the board every single day. Very few people know that trade. If you don't have an initial balance on your chart, you need to get one. If you don't want to use ours, use someone else's or draw them every day. It's the easiest trade every single day. First test of the IB high or low. Anyway, not to digress into that. But look here, as the sentiment shifts and the aggressors take over the sell side, look below. Right? I mean, this... you've heard me say these before. I color code these, and I often refer to them as my dumbass filters. So, for example, right, we can see while the market's going up, is there anything here that would make you think I want to be a seller? Aside from just the fact, hey, I got higher highs, higher lows all the way, so I've got a clear trend going on. Now, once we start to come down, which is just typical, this is how the market moves, right? The initial move, the retrace, the profit taking, and then towards the end of the day. When it looks like this, do I want to be a buyer? Well, you might say to yourself, hey Sam, what about right here when we start to turn? Well, remember I told you I want to look for those gaps. So when I start to see the gap between the negative delta here and the moving average here, it's almost the way to look at that is to take your eye and look at the gray area as though that were now climbing. Because it is in actual fact, but you have to kind of condition your eye to looking at this. So if I was tracking, I can't do it because this only draws straight lines, but I can see that the Cum Delta is drifting lower here and is really emphasized via that gap between the moving average and the histogram bars, to where now and then here I go on the other side of the average. So that line I think is very useful, and I don't go without it. And again, all I've done is I've just taken these two lines and I've made them transparent. So the average is still there, but I'm applying the average to the histogram. Now this really makes it clear, so you can see. Get that out of here. What happens at the end of the day? God, come here. I want this. Okay. Now note here. Look at price. This is a good example of it. Price is moving higher, but what's happening down here? Again, how do we explain that? Right. So again, the variable being that this is the end of the week, Friday. But we can see here that the market orders are selling, professionals are buying. So it's limit orders are driving the price up, despite the fact that all the market orders are coming in, which could be just clearing up books, end of the day. Could be, very easily could be, you thought this was going to go down lower, right? So for whatever reason, the break here, right? So retail or aggressors thought market order, we're going to sell off into the close. Well, limit orders put a stop to that, right? They're taking it up to grind to the end of the week because they want to be long, right? You make that assumption that they want to go into the week long, right? Maybe not, right? You're trying to deduce things that we can't know. But I can certainly understand why the market goes higher despite the negative Cum Delta. Limit orders. Right, same thing here. When we start to turn before the aggressors have recognized that the trend is changing back, right, creates that gap. You can see it, right? Smart limit orders are taking that up, despite the fact that if I sit right here, right, I still see right here. Well, here's a thrust down. Oh, maybe we're going back down with that red bar. Oh, maybe this was just the retracement, and we're going to go back down. So if I just put a little fib swing on that. All right, so 50. Oh, maybe this is what's happening. I can see exactly what's happening. Oh, we're going down to that. Right. Well, you had a little trade there. There was a little trade, but we fail, and then you might draw something oh, just something like this. Say, okay, well, I've got some support down here. If I get there, I certainly want to be aware of what happens when I get down to that little support structure here, because I can see, oh, we're still negative here. Maybe this is going to go down and get that target. But as soon as we start to rally and we're climbing, now again, put your eye on the gray as though that's a line that's increasing in value. Limit orders are taking that up, right? So the whoever's short here is being forced to cover. Right? They thought it was going here, right? Up we go. So stops are getting hit, so they have to buy to get to cover those shorts, which is why the cum delta is rising. Okay, I think I've covered that in enough detail. Let me just quickly go back here and see if this is particularly good here. We're just going back to Thursday. Now, this is kind of interesting, right? So this is another good example. So here we are on, pardon me, I think this is Wednesday. Is that right? Yeah, I think this is Wednesday. It doesn't matter, right? So, but here's this just the most recent week. Well, look here at the start, and we're clearly we're out of sync, right? We've got the market rallying, but look at the cum delta, right? It's been very negative, right? Since this was the big sell-off at the end of the day. You see reflected here. So the overnight bias is still, oh, we're still going down, right? So the aggressors are on the short side here. Why is it going up? Who's in control here? Right, well, clearly limit orders, or you can think of it as the smart money and the dumb money. The smart money is taking it up, right, because it's almost the same amount here, right? Here, this one is there's 1166 ticks, right? I mean, it's only $5,830, right? Now you're not going to get swing low to swing high, but you know, if you could participate there, the thing, I guess the point I'm trying to make here is when you see this, it would have you thinking, oh my God, I got to be on the short side. Well, careful about that. You have to understand that this is just showing you market orders, not the limit orders. So if it's going up in the face of this, you know who's in control, right? And you make that deduction. Well, limit orders more likely going to be the professional traders. Market orders more likely going to be the retail trader. So professionals are in control here. And even we just get barely does the cum delta get positive, because it has to build from, I mean, we're way down here, negative, we'll call it negative 3,500. For us to get all the way back into the positive, that's a lot of positive delta has to be expressed in the market here via the market orders to get this to go all the way positive. But again, look at the average and look at, so again, put your eye on the gray, right? That's climbing, right? A little retrace, now up, all we go. Same thing over here. Now, once we get to the top, again, look at the gap we get here. Now, you could look at this in the candles or here, but what I can see is, once again, I've got a lower high being put in over here. So if I were thinking, oh, we're off to the races here, this would be a warning shot. Now, look at the time of day, right? We're right between 12 and 1, right when the market typically will start to sell off, and then maybe there's another kick in the afternoon. This is a very typical day. So now, all of a sudden, lower high, lower high, lower low, higher, lower high. Look. Right, so what are we looking for? We want to be in sync. Now, if you're a swing trader, right, this going up, you know, there's up to the individual and your experience level and what else you're using to make determinations as to which way you want to be in the market. But what I want to see is when everybody's in sync. So smart money and dumb money are both selling off down here. All right, as we start to go up, I still have all this negative delta. So how can the market be going up? Right, only through limit orders. Right? That's the limit orders are overwhelming, even though you have this huge flood of market orders that are coming in because they're chasing that. Limit orders say no, right? So up they go, and you can see it again. We get a little gap between the average, and then the end of the day there is a little sell-off. And now, are you going to be trading at that in the last half an hour of the day? Maybe not, right? It's more dangerous. It gets a little squirrely at the end of the day. But you can see here, look how far we are below the average. So here, if you were trading, at least you're in sync with the sentiment. The aggressors, limit orders, and market orders are aligned. That's how you want to use that. So it depends on the day and what I'm trying to accomplish. But of the two, I probably use this more, certainly for swing trading, because I get a real feel. It's just a glance at where the sentiment is in the market. That's almost how I look at it. But if for a full template, I'd have more on here. Now, before I wrap up here, because I'm running long, let me show you what's involved on the parameters here. So stand by here and we'll take a look at that. Okay, just to wrap up here, now I'm inside the cum delta parameters here, where you can see there's not a lot of A lot of choices to make here, but I thought at least I'd show this to you. So show as histogram or candlesticks, right? You've seen both versions of that, here being histogram. This would be relative to the Bollinger Band setting. So number of standard deviations, I think the default here is very adequate. So 2 standard deviations, very common. A 20-period moving average makes sense. I've got a smoothing period of 4. These, you can change these to your heart's content, whatever you'd like. Then down here, where I showed you a couple of examples where, for example, down here, I just have the moving average, the midline. The 20-period moving average is the center line. I'm keeping that in white at a 2-pixel thickness here, so I can see that I have the Bollinger Bands made transparent. If I wanted to show the Bollinger Bands, well, obviously, right, and you can just save it as a template, right? So I have a template, histogram template, Bollinger Band template, just candles template. So you just make them transparent. Very easy to do, right? It's just a question of, and some people will have the histogram below and then the candles above that, right? So you might be able to do both, right, in terms of scalp entries in addition to maybe some swing trades, or perhaps you're adding to a swing trade. So there's a lot of variability here in terms of how you interpret that data and how you want to look at it. But with regards to what's available to you within this indicator, it's relatively simple. Now, for a full template, this is a template that I would use. This would be considered a full template here, where I have now quite a number of our indicators on here. These are all McGinley lines, but you could replicate them with an EMA. A volume profile here, some of our support resistance. This is our volume zone indicator, and then down here I've got our cum delta, and then the devil's edge in the middle. So this would be a template that I would use, and that I do use on a regular basis for this kind of analysis. So here was, kind of see it here, this being kind of a sense of trend and this being VWAP. So this actually, in my mind, I'll tell you how I make the distinction, because the volume zone oscillator is really a very sophisticated OBV. That's essentially what it is, right? With some moving averages and an ADX tied into it for trend detection. But I think of it this way. In my mind, up here, this is smart money. Down here, this is dumb money. Now, again, I probably offend people saying it that way, but that, in my mind, that's what's happening. So what I'm looking for is when smart money and dumb money are in alignment. So off the open, right? Smart money, right? Zero line, very important here. Smart money, OBV, because this is a bit of a leading indicator. What's the smart money? Are they accumulating? Are they buyers? Dumb money, smart money, dumb money. They're in alignment. Okay, as we get the momentum change, now smart money is negative. I've got momentum here via the devil's edge, so I can, where I also have a set of Bollinger Bands applied to the MACD. So I can see momentum's going down, smart money short, dumb money short. So I am interested in the short side there. Particularly, that's an 89-period McGinley, but you could use an 89-period EMA, would be very comparable. But when that breaks, and I've got my 34-period McGinleys, all pointing down, smart money down, momentum down, dumb money down. These I joke when I say this, but these are my dumbass filters. Hey, dumbass, this is not a place to be looking to be a buyer. Hey, dumbass, this is not a place to be looking to be a seller. That maybe just be me, but that's what's going on in my mind. Where's the smart money? Where's the dumb money? Right. So here, end of the day, limit orders are driving it up. Smart money, dumb money. Professional, amateur. I mean, that's a more PC way to say that. Oh, come here. Let's get that off. Let's go back one other day. How do we look here? All right, smart money. All right, same kind of thing. Right, so here I got a little bit of a mismatch. Right, so we're coming in. Smart money is short. Pardon me. Let me say it this way. Retail short. I'm kind of waffling here with smart money. They're on both sides of it. Now eventually we start to roll here, but it's not until here where I'm in sync. But I'm not in sync yet, right? So I would be a little bit more reluctant here because I'm a little bit out of sync here. Now here in this chunk here, right, we go right up here. It ends up being the high of the day. We get this push here where everybody's in sync, but it's okay. There's a little bit there, but what's I see more substantially here is through all of this as we're coming down, it's being reflected down below here. So here's in sync, right? Momentum lower, cumulative delta, the tally, right? Amateurs short. Professional short. End of the day, right? Does it change? Oh, let's just get them all off here. So as we start to go up here, now look, right? So the 34 McGinley's, this is the 89. So here's where it gets interesting, right? So you're looking for that move. Smart money, dumb money, right? Do I want to trade that? Well, again, this would require some experience with this. Note the gap, right? Remember I said I'm looking for that gap. If we're going higher, I want to see that now I've got a gap between the average and the histogram. Here's the devil's edge, right? So we're pushing. The center line is the vortex. There's a TTM squeeze. So I've got all of this. So here, smart money, professional, momentum. I've got that gap down here. So retail's being forced to cover because limit orders are driving it higher. Okay, I think that probably gives you enough to at least determine whether or not this is something you would find useful. And I remind you that all of our indicators, all of them, can be trialed for free for 5 full trading days. So we say a 5-day trial. That's not 5 calendar days. That's 5 trading days. So you could download all of our indicators here, recreate this template or any of these that you might like based on how you want to use this data depending on the type of trader that you are. All of our indicators can be downloaded and trialed for 5 full trading days. Keep that in mind. All right, well, there you go. I hope you'll find this helpful. And with that, I'll wish you good trading and a good afternoon.